Good morning, everybody. All right, today we have a great lesson. It's going to be the top 10 chart patterns, if I can find them. So we're going to jump right on over to Thinkorswim. These are the top 10 patterns that I want all of you guys to know. Anybody that's with me, that's been with me, you can use these in conjunction with what I've already taught you. It'll help you out immensely if you're not catching on to what we've already talked about. And I'll show you how what I've taught you all along is even better than recognizing these chart patterns. But if you get it, and if you understand it, and if you have to watch this video 10 times, it's going to change the way you trade. Guys, all my videos have meaning and purpose. You don't need to jump from place to place to place. This is 100% free. Again, if you're a profitable trader, why do you need to charge people? I'm trying to help you guys, and if you would just let me help you, you would be successful. All right, but you got to learn this, right? You know, it's like anything else. If you don't put in the time or the work or the effort, you're not going to get anything out of it. Right? Let's say I'm a 20-year veteran as a police officer and you're a rookie. You're going to make a lot of mistakes right out of the gate. And it's going to take you a few years and thousands of interactions with people for you to get your own thing set in stone, if that makes sense. All right, guys, so here are the top 10 chart patterns that you guys can look for and recognize. The first one being today was on MRM. I alerted MRM last night on Facebook and Discord. We had a nice move on it overnight. I called out to watch for the continuation today, amongst a bunch of other ones. Let me find my epic pen here. I'm going to need it for today. Hope you guys did have a great day trading today. All right, so we got the pen. Here we go. Guys, what I'm teaching you, I'm not BSing on anything. I don't beat around the bush. I like to get straight to the point, jump right in. I don't want to waste your time or mine. If you're new here, I don't do any video editing. I try and do everything live as it's happening, as it's unfolding. If you've been with me on Discord, you could see I constantly call out plays step by step live as they're unfolding in the markets, and I'll always test my team and ask them, what do they see, why, and all that stuff. So if you're interested and you want to learn how to become a successful, profitable trader, just watch the videos that I have over and over and over again until you get it. All right, join us on Discord. I'm not there every day, I'll admit. What we're leading up to here in the future is we will be here live every single day. And we're going to be trading all day live with you guys. Again, I had the one small account I got on Trade Zero. That got up quite a bit, so I'm opening up another one. And I'll go live with that. So just bear with us. Hang tight. Take the information I'm giving you. All the information you'll ever need is in these videos, guys. So I'd recommend just watching them all. All right, so let's jump right in. So yesterday I called out MRM. For those of you who are new here, I have a 4-hour layout, a 15-minute, a 5-minute, and the 2-minute. I trade off the 2-minute chart. All right, so on MRM, the first pattern that I see here is A, B, and then this here would be C, and then a D. So right here we have the ABCD pattern. The ABCD pattern consists of a stock making a move up, trading sideways without a big pull down, okay? So it makes a big move up, trade sideways, and then makes a new high. That's called the ABCD pattern, all right? It's a very common pattern. You see it just about every day on every chart. All right, so with this being an ABCD pattern, all right, now we're going to come into something that all of my traders should know, and I hope they're using it, which is the RSI, which is right here, the RSI. Relative strength index, guys. I have mine topped off at 40. There are other videos for you to learn how to do that. This is specifically for chart patterns, so I want to keep it at that. And I have it at 50. So anything above 50, I'm looking to go long. Anything below 50, I'm looking to short. All right, we do it all here. I do it all here. We'll get you all there. So now let's open this up here. After the ABCD pattern, and I really like this chart because there's 3 patterns on it already, 4 patterns on it. All right, so if you couldn't spot the first pattern, which is the ABCD pattern, all right, again, that's a stock making a move up, trading pretty much sideways, consolidating. This right here, I want you to pay attention to. This dip technically would have broke the ABCD pattern, okay? You don't want to see a big dip like this in an ABCD pattern. But what we did have forming, remember, this is the 5-minute chart, and I'll go right back over here to the 2-minute chart in just a second. But I was watching this, and then I saw we had a nice cup and handle. All right? This is a classic cup and handle. It can form on multiple time frames, okay? It can form on the daily. It can form on the 5-day. It can form on the, what do you call it? The 15-day, you know, whatever. It can form in multiple places is what I'm getting at. All right, so where do you buy a cup and handle, and how do you calculate the measured move? All right, a lot of people struggle with measured moves and, you know, where to get in, where to get out of a stock. You know, typically, with time, you should be able to nail every bottom and every top with precision. All right, with precision. I couldn't tell you how many times people have laughed at me because I go into like places like Wall Street Bets, and I try and help these people. All right, I try and help them, tell them to come join us, 100% free. They're like, there's no way you could nail the tops and bottoms of any ticker. Well, the people in my group here on Discord have seen me do it time and time again, because not only is it possible, it's achievable, and I do it. This is why I like trading when the market, teaching you guys when the markets are open in real time, like right here, right now. Look at what we got. All right, we just broke the right side of the roof on a MRM. All right, the right side of the roof is you draw your channel down, and as soon as we get smoke, see here we had a chimney, it didn't work out. Now we had a chimney, and we're already starting an uptrend. Too many people are afraid to get into a position. All right, and that's why they lose money. All right, let me show you what I mean by that real quick, and then we're going to jump right back into the video. But right now, I would be in this particular trade if I wasn't trading. All right, so what people do is they'll see the price rise, all right, and they're like, well, I don't really want to get in. I don't know if it's going to go up. Then they'll see it rise more. Then they'll see it rise more. They'll see it rise more, and then they're like, all right, I'm going to get in now. And they get in right up here. I've seen some of these gurus, not just once, but hundreds and hundreds and hundreds of times, get into positions up here. That is the worst place you could possibly get into a position. All right, guys, the absolute worst. Why would you wait? You had all the information you needed right here. All right, and I'm going to show you that right now. But why would you be buying up here? Come on, you already had a massive run-up, man. You know what I'm saying? The next candle would have took you out. So let me show you how we do this, guys. All right? This is called a cup and handle. All right? Cup and handle. Now let me show you how you make a measured move on a cup and handle. All right? So what you're going to want to do is put your drawing tool on flat, all right? And right here on this previous candle, before the big candle that went down, you're going to make a line, all right? And you notice now that you got the cup forming, so now this is interesting you. You're like, all right, we got a cup forming. Let's see if we get a handle. All right, now you got the handle forming, okay? The handle, a little bit of a pullback, And as soon as this candle broke above your support line, you're looking to enter that trade immediately. You do not hesitate. You do not wait. That's your entry point. Well, not that. Your entry point should have been right here. All right? The second that handle, not the cup, not and, but the handle. The cup and handle. The cup and handle. The cup and handle. Okay? Hope you guys got it, all right? You have your support line here. You had the cup formation. You are literally watching the handle form on the 5 minute, right? Boom! This is where you enter. The second that it crosses that line, you don't hesitate and wait and say, well, you know, maybe I'll get in here. And then you say, well, now it's way too high. I'm not going to get in. And then you say, well, it's still going up. I'm going to get in. And then, boom, you're taken right out. That's not how you trade, guys. All right? The reason most traders lose is because they wait too long to get into a position. All right? That's the number one reason traders lose, other than being uneducated and new to trading. All right, so we got the cup and handle. I asked our group this morning what they saw, if anybody could tell me. One of our members, I won't name them for their privacy, called it out, but he was looking at a different cup and handle. All right, now let me show you the difference between cups and handles. All right, now that you know what a cup and handle is, how to trade it, let me show you what not to trade. All right, so in the picture, I pretty much sent this area here and asked him if anybody could identify. And he noticed the cup and handle, but he noticed this one. All right, this one, first of all, on this one here, we would need to draw our support line. So let's go ahead and put that in there. So we're going to act like this is a cup and handle that he saw. All right. So let's draw our resistance line, which was right here. All right. So he was looking at this as being a cup, and we don't have a handle. All right. Notice on this cup and handle, cup and handle. On a true cup and handle, your pullback is not going to be this steep of an incline. It's going to be it's relatively going to go sideways a little bit down. If it's this steep, it's no longer a cup and handle. And if you just had a cup and handle form, you're not going to get two cup and handles in a row. But with that said, all right, with that said, we do have another pattern forming here. Can anybody guess what it is? I'll give you guys a second. I really want you guys to learn this. We have an ascending triangle or wedge, whatever you want to call it. What does an ascending wedge consist of? All right? An ascending wedge consists of price that is continuing higher. All right? We made a move higher. We had the A, B, C, D pattern, which kind of broke here, but then it gave us a cup and handle. All right? Now we have an ascending wedge formation. All right? An ascending wedge consists of price action. Hang on, got to get the smaller dot here. Price action making higher highs while maintaining a relatively what do you want to call it? Might have lost for words here. All right, it's a stock that's making higher highs on the bottom side. I mean higher lows, but the top is staying relatively the same. All right, that is called either a rising wedge or an ascending wedge, They're both very similar, all right? So we have a rising stock price that's finding resistance in the same area. All right, so here the stock has risen all morning, but we're having resistance in this area. Now, if we look back here, let's just go ahead and draw resistance lines here. That was for the bottom. Notice we never broke that. Now we're going to put a resistance line right here. Notice where we started pulling back. And notice this is a 4-hour time frame. So now let's put one right here on top of this high candle. Notice this is our next area that we used as support and resistance. Now we're going to go, let me just open this up. We're going to go, let's go here, right here to this high. See where that brings us. All right, that brings us right about where we're looking. Let's go back a little further, and we'll go to this high. And that puts us right where we need to be. And I'm just doing this to show you guys. So I'm going to remove some of these, but notice how the price respects this. And there's plenty of other videos I have for that. Right now we're talking about certain patterns. All right. So this is an ascending or rising wedge. I'm going to remove these other drawings. And what I'm teaching you guys here, it's chart patterns that help to suggest what price might do next, okay? All this, what I'm showing you guys, is based on what the chart has done in the past, all right? Chart patterns help you, give you an idea of what a price could do next and what it should do next, all right? Again, you're not trading against all these people. You're trading against an algorithm. This is why chart patterns work, all right? All right, so back into the ascending wedge. Right before the bell, I threw out a thing here. Be careful because you might have profit takers selling at the open. All right, and we did get that. We got a little bit, but it was strong enough to continue an uptrend. So understanding patterns, price targets, you know, how you have to understand the market. You have to understand what hours, you know, does the market move the hardest, all right? How does volume play into all this? There's so many factors that go into, you know, what the stock market's actually going to do, when it's going to do it, how it's going to do it. You know, a lot of these patterns you're looking for in certain areas. So there's a lot of information that goes into this, guys. You know, there is no magic anything out there, okay? You know, the RSI, the 20, the 200 are going to be your best friend regardless of anything else. Now notice, even with the cup and handle, right, from what I've taught you from day one, is that we break through the 20 and then we use the 20 as support, right? We go away from the 20 and we pull back. We go away and we pull back. We go away and we pull back. We go away and we pull back. All right, so these strategies are just going to be another tool that you can use in conjunction with what you already know and with the RSI. All right, the RSI here, we had the same, right in this area, we had double top RSI, but our price made a higher high. So what does this tell you? This tells you the stock is going to pull back. Moreover, what else do you know that I've already showed you, right? We are away from the 20. What else do you see here? Double tops, all right? So there's so many pieces of information. The more you watch my videos over and over and over again, the more you watch the market, guys, you're going to be able to spot this stuff like you're looking in the mirror. You know, I could go on to any chart anytime and just pick it out. I mean, it just jumps out at you. But you're never going to get it if you don't spend the time to learn it. Okay? If you're under the PDT rule and you get 3 trades a week and all you do is come to the market and you say, oh, this looks like it's going up, I'm going to get in, I'm out, I'm done for the day, you're never going to be a trader. you might as well just go buy yourself a car with what you got left and call it a day. All right. All right. So back to what we know. All right. So we had a cup and handle. Man, I love these. How this just has a mind of its own. We had the cup and handle, and now we have a rising wedge. All right. I said be careful. All of my traders know I do not like trading this area right here. You know, the first 5 minutes before, first 5 minutes after. I never buy the 1 minute. It's very rare. I don't want to say never, because I do, but very rare. All right. Even though this was showing a rising wedge, an ascending wedge, the time, we're right at 9:30. And if you come up here and look, you have all of these people that have been in this for 8-9 months now, right, that have been losing money the whole time, and now they have a chance to break even, right? So you would expect sellers to step up in here. Now, what could stop that from happening? Right now, the market makers could have orders for 10 million shares to sell this, right? Today, at the open. When they get orders, they don't have to execute them immediately, right? They're not dumb. They're here to make money, right? So let's say they got 1 million sell orders, just say for this price. Okay, what happens if they sell it up here? They made more money, right? So just because they have those sell orders don't mean they have to let them all go at the same time. And they would never do that, because if they did, the price would just tank, right? It would cause panic. So they have to get rid of these orders little by little, right? And the way they do that is on light volume. When you see no volume on volume bars and big red candles, okay? When you're looking at the volume bars, those are market makers selling pretty big orders. But they do it, they stagger it throughout the day, right? They're never going to dump everything they have at once. All right, so just remember that. So this is why I was warning them, be careful. Even though we had the rising wedge, right? And what this means is that buyers are coming in at higher and higher prices on the way up to buy this, right? This tells you that buyers are in control, right? So based on this wedge pattern, we should technically see this go up at the bell. But again, because we're at the bell, you know, I just don't like trading any kind of pattern here right at the bell. And I definitely don't trade the first 1 minute candle. Again, I don't want to say ever, because I have, but I wouldn't want you guys to. When you get a first 1 minute candle, if you're going to trade it, if you want to trade a 1 minute candle at the bell, I'm looking up here at my thing. Let's look at our walk, all right? Our walk here, and this isn't a great example, but it is. You want that candle, the first 1 minute candle, to be a green. I mean, this is a shooting star, all right? So this is a good example, but you don't want to see any wick at the top of that first one. This is a 2 minute candle. Sorry. I usually teach you guys on the 1 minute chart. I trade off the 2 minute. But this is what you're looking for, all right? You want a solid green candle, all right? Now look at what this candle did. This candle took out about 30 to 40 minutes, an hour worth of candles to the left, which means every single shorter was trapped on this candle, all right? I would not only expect it, but I would demand that the price is going to continue to go up. Why? Because you have all of these shorters traded, and they didn't start covering until this candle. I know exactly where they're covering by the size of the candle. And now how do you do this? How do you know that? Time, guys. Time. Paying attention to the markets. Constantly learning. Constantly sitting in front of the computer screen for endless upon endless hours. That's how you become a professional at anything, right? A doctor doesn't go to college for 1 year and go in and start in the operating room, right? So on the 5 minute, man, there's no need to get out of this. We have almost a solid green elephant bar, which has all the shorters trapped to the upside, or that cause them to cover to short. But we have no wick on that 5 minute candle. So I'm not looking to get out here. And if you look at here, I mean, we're still on an uptrend, right? Now, what you can do in these types of situations, you know what? I'm not even going to go into that. I want to stick to the top 10 chart patterns, like I said. So I just showed you that thing real quick. All right, so now we got to look for another pattern. So let's see if we see anything here on this ticker while we're here. All right. Now you see, this is not a cup and handle because we don't have a cup. I don't know why this does this. We don't have a cup and handle. We have, what we do have here though, well, we don't even have that. We have double bottoms. I always trade double bottoms. Double bottoms are a great thing to trade. That's in some of my other videos. If you want to watch them, feel free. But, you know, there's so many factors that you want to take into consideration when trading, guys. And if you're not willing to learn, then you're just willing to get burned. All right, so let's see what else we got here. Here's a good one for you. All right, let me back this up. All right, if you guys don't know what these are, this is just called a channel, a simple channel. And the way you can make that channel, I also call it the right side of the roof. This really, wouldn't consider the right side of the roof. It is what it is. Let's call it that. It's a channel. How do you get a channel? Let's remove this. Now you come up here to your little drawing tool, and then right here, it'll tell you channel. So what you do is you just draw the top, and then you click and pull the other one will just come down. When you're in a channel, you're looking for price to break out of the channel, and that's when you place your trade. Again, when you guys place a trade, the thing that kills most traders is they hesitate and wait too long. They're scared to get in. All right? Now, right here, this is one of my favorites. And I love that it's happening in real time, but again, we have a nice rounding bottom. All right. I love seeing this pattern. All right. We'll have a little bit of a pullback here, and then the candles will get smaller and smaller, but then they start stair-stepping, and then what do we got right here? A double bottom. What do we got right here? A double bottom, right? Let's go look at what we got on the higher time frame. Here we had the double top indicating a pullback. Here we got that confirmation double top. And again, if you guys did the channels like I just showed you, all right, you could ride the channel until the channel breaks. All right, just like this channel. Very simple stuff, guys. So let's get into this right here. I want to focus on this. This, anybody tell me what that is? Anybody? Bueller? Anyone? Bueller? It's just a triangle. Could be a bilateral pattern, whatever you want to call it. But notice it just looks like a triangle. All right? That's all it is. But with this pattern, we are at the bottom. All right? Typically, you know, these can form anywhere. All right? They can form anywhere on your chart. But they're hard to trade, especially in a spot like this. All right, so let's look at what time did this started today, probably around 6, 7 o'clock. So probably 7 o'clock, announced publication, canceled, eliminate direct support and therapeutic. So it had news, all right? So typically with news and a low float, 12 million shares, all right, you could pretty much guess the price is going to go up. But we don't want to guess, right? We're not here to gamble. We're not here to guess. So in a wedge pattern like this, the best thing you can do, if you don't really know what you're doing or how to trade, all right, in a wedge formation like this, I see another pattern here, but I'll go over that in a second. So in a wedge formation or a triangle formation, you don't know whether the price is going to go up or down. All right? Because this of the location where it is, you can almost guarantee it's going to go up. But what's even more than that, another pattern, guys, is that we have a bull flag. All right? That's a bullish move. It's a bullish move anyway because it just formed with news. But that doesn't mean, there's a lot of stocks that come out with great news every day, and it could tank. Moral of the story is when you get a formation like this, your best bet is to wait for the breakout in direction. All right, you want to wait until you can physically see which way it's going to go. But we have other ways to confirm this. We had the RSI here making higher highs while the price relatively stayed the same. We could clearly see a formation of a bull flag pattern. All right, I can, and I want you guys to also. All right. So, how do you know how high the price will go? All right, this is where something that we call measured moves comes into place. All right, you know what? Now that I think about it, I didn't talk about that on MRM. So let's go back to MRN this morning, and what would have been a good price to close out half your position on MRM? The way to find a measured move on any kind of breakout pattern, pennant, and you know what? I'll cover all of them. So when you have a cup and handle formation right here on your support line that we drew, or on your resistance line that we drew, remember your cup and handle formation is going to be the resistance line from where it dropped. So from that line, you are going to go to the lowest part of the cup, and you're going to measure it. I think I did cover this with you just a minute ago. Now, once you get into that position, that's the size of profit you're looking for. All right? Close out half of your position on this size, okay? That is called a measured move. Then you can let the rest ride. All right? Typically, you guys, I showed you my thing the other day. If I get in here, I'm selling the entire way up. All right? I'm not holding the whole thing. So now let's look at the measured move on the wedge pattern that we just talked about. Okay? How do you do a measured move on a wedge pattern? So here is our ascending wedge. Your measured move is going to be from the top of your resistance line to where the formation originally started. This is your measured move. Okay? So now you're going to take your measured move, which is 1258 up to 1519. 12, 13, 14, 15. So let's say a $3 move. Okay? So once you see this wedge and you get that breakout, you are now looking for a $3 move to the upside. The same amount that was in this area. Your measured move is what it's called. So we went from 15, 16, 17, 18. We got a $4 move. All right, so we got the measured move, and then we got an extra $1. All right? That is how you want to trade. Okay, that's how you want to take your trades. And that's what you're looking for. Where should your stop loss be? Those of you that know me, I don't use them. The market makers can see them, and they'll knock you right out. I'm sure that there was plenty that had their stop loss right underneath this candle, or right here. Now notice the market makers pulled this. Let me change that. Let me get this bigger. I really want you guys to see this as clear as day. People that saw this wedge forming, right, and that use stop losses, let me show you why I don't use stop losses. All right? So look at where the price pulled at the open, okay? And I want to get this exact. And I'm going to draw a line exactly to that thing, okay? Now, let's look at what the market makers did. Now, notice what do you see right here? All right, these people put their stop losses at the bottom of this candle, right here. This is where normal traders who use stop losses put their stop losses. Now look at what the market maker did. He pulled that within cents of their stop losses, okay? So what did he do? He knocked everybody that was going to the upside completely out of their position. And then what happened next? The stock rocketed up to the upside. This is a classic example, guys, of why I don't use the stop loss. Because the market makers will always knock you out of a position before it does the move that you knew it would do. Okay? That's just the way I trade. I don't recommend you blindly follow me or anybody else. Trading is hard. Trading is risky. And you could potentially lose everything you have. Alright? So, this is why I personally don't use stop losses. And again, I love when I teach and, I just randomly see this stuff. I mean, it's just, most of these gurus that are teaching you and have these courses, it's all planned out. Guys, I mean, they're not doing this stuff live because they can't. There's articles out there that 90% of the people who sell trading courses cannot trade themselves and they have never been profitable. So there's that, all right? Almost everything I do live here with you guys. And there's a reason for that, There's a reason for that. So here, now we're just kind of trading sideways. I know we talked about this earlier. But again, when you're trading after the bell, and if you guys have noticed or been around long enough, 90% of the time, between, I would say, 10 o'clock and up until about 2 o'clock, stocks typically just do this. This is why the 10% of traders who are profitable only trade. I'm up at 4 a.m. All right, I love it. I'm up at 4 a.m. We had several runners this morning at 4 a.m. And we're coming back into season, so now I'm going to be up at 4 a.m. every day. You cannot trade 4 a.m. on Trade Zero. On Thinkorswim. Thinkorswim starts at 7. But I have other platforms that I could trade at 4 a.m. So most traders, though, are going to trade between 7 and 9:45, and they're done. They'll come back at 2. And most will trade till 4. We see a lot of good moves after hours, but that's because, if you live on the East Coast, you're lucky because your normal hours are normal stock market hours. You got to remember, there's people all over the world trading at all different times. So, this is what you'll typically see during the day, which is why most traders stay away during the day. And don't get me wrong, you see plenty of nice moves throughout the entire day. Right? We've all seen it. So, anyway, let's cover a few things. What have we covered so far? So far, we have covered the cup and handle, the ascending wedge. We covered the triangle pattern. And what else did we cover? I don't even remember. So, we covered how to make your target move. What price are you looking to capitalize on or get out of a position? You know what? Now let's start looking for double tops, double bottoms. All right? These are all things I've talked to you guys about in the past. Let's look right here. All right, so right here is a perfect example of our walk yesterday coming into the bell. This is the 5-minute chart. So let me go back here. Right here. This was yesterday, okay? 7 a.m. to 10 p.m. Now here, what do we have here? Can anybody tell me? Here we have another rising wedge, all right? Kind of same thing that we just saw, all right? But the difference between, oh, you know what? This is beautiful that we have this, and I'll show you why. All right, here we have a rising wedge. So what are we going to do? We're going to draw our line again, right? And I'm not back far enough on here, but it's okay. All right, we could see the pattern. This one didn't complete to fully fulfill it. But, this is what you're looking for as traders, guys. You're looking for similarities, for things you know. And I even see another one right here. We got a triple bottom. You know, boom, 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 boom. This is one of my favorite plays. All right? But here, you know what? You could actually call this more of a triple top. And, you know, there's so many similarities. But I just want you to get in the habit of recognizing what you're looking at when you're looking at it. All right? So let's put a trend line right here. Let's open this up even more so we can see it. Let's put a trend line right here. All right? Now notice what we have here. All right? Now let's put this one back here. We have sellers up here. Okay? And then we got buyers down here. Right? But what stands out at you the most about this chart? What stands out to me is that we're making lower highs. All right, we're making lower highs, but at the same time, we're making higher lows, right? So now what else could we do? I mean, what else could help us in this situation, right? Let's look at the RSI. Could the RSI help us? From here to here, we have a lower low, but we also have a lower low here. So that's no good. That doesn't help us any, right? What else could help us? Well, I notice we have double tops here, we have double tops here, and we have double tops here. Nowhere on the bottom do we have double bottoms. So that shows me we have strength to the downside. All right, now let's come over here to our 5-minute chart and see what we got here. All right, 5-minute chart, we got a different story. 5-minute chart, we got double bottoms, but then we got these set of double tops right up here. All right, we don't have any confirmation double tops here. All right, so which way do you go? You know, this is one of those prime examples of, you know, sometimes it's just better to wait, right? So now let's go look at the 15-minute and see what we got on the 15-minute. And on the 15-minute, again, we don't have any specific double tops. We do have this double bottom, right? I would have went long on this double bottom. And that would have been a good, nice little entry. But now what do we have here? Here, we still have divergence in the RSI. So this is going to be our most accurate piece of information. Is we got double tops on the 2-minute, and they're all making lower lows. But notice, again, we're coming into that area of 930. So I really wouldn't be interested in trading this, just like I wasn't the other one earlier. And I told the guys in the group. So these are, you know, descending triple tops or a descending wedge pattern. Sorry, an ascending wedge pattern. Now let's go look here, because I saw another setup right here. Right in this area. All right. Can anybody tell me what they see right here in this particular area? And let me back out of this chart for a minute. I'm actually going to open this up even more. All right, so what we have here, this is called a falling wedge. All right, where you have a straight bottom, but you have the wedge going to the downside. This typically is going to happen on a downtrend. And what it signifies is a reversal to the upside. Okay? I hope you guys are following me on this. Again, if you don't get it, just go back and keep watching it over and over and over. All right? So what we have here is called a falling wedge. You're typically going to find these in a downtrend, and they'll signify a reversal to the upside. All right? So again, on this, now we have more things that we can look at besides just a falling wedge pattern. All right? Falling wedge is going to be a straight bottom with a falling price pattern. What we have here on the RSI, we're making lower highs, but we're making higher highs on the RSI, right? We're making lower highs on the price action, but we're making higher highs on the RSI. What else do we have here? Let's open this up a little bit. All right, so here is your ascending, your falling wedge, right? Here's our baseline. The second we break out of that, with the confirmation of the RSI, you want to be in right here. You don't want to wait here and then say wait here like we talked about. You know, you want to get in. You know, if you're going in these things with 1,000 shares, 2,000 shares, 5,000 shares, 50,000 shares, okay? And if you ever go big like that, make sure it's liquid and you got volume, all right? Because if you go in 50,000 shares on a ticker with less than, you know, I wouldn't go even into these right here with that many shares because you might get stuck with them. So you want the stock to be liquid, remember that. But don't wait, okay? If you wait, you're going to miss the boat, right? That's why, this is why traders fail, because they don't have confidence in themselves. They don't trust their judgment. They don't trust what they know. And if you don't know it, that's great. You're here to learn. Welcome. Right? I'm trying to teach you guys. All right? So, you know, once you get the hang of this stuff, and I can't stress enough how important it is, guys, is you have to be willing to learn. You have to want to learn. All right? If you don't want to learn and you're not willing and you don't want to put in the work, I mean, look at Timothy Sykes. You know, that guy amazes me. He's out there day in and day out. You know, his money isn't coming from trading. It's coming from selling you his course. All right? You're not going to learn half of the stuff with him that you're learning with me for free, but the guy has what you need. You have to have that dedication, man. And then my hat goes off to that guy. You know, I love that he's out there building schools and, you know, all this stuff for the poor and all that. I just, my hat goes off to him. You know, I don't care. You know, I do care, but I could, you know, even if his course wasn't that good, the money's going to a good cause. So I'll just leave it at that. I don't know what his course offers, but I know he's been around for quite some time, and he has like 10 millionaire students. So, you know, apples to apples, oranges to oranges. But, you know, that's what I want to get. The moral of that story is you need dedication, and that man has it. He has drive. He has a heart for what he does. And I respect him, you know. The guy is there day in and day out. You know, weekends, I'm always looking for chart setups, looking for patterns. You know, I've told you guys 100 times, I'll spend a few hours a day just watching YouTube videos just to see what's out there, you know. Sometimes it's like entertainment, but even though trading, you know, for as long as you or I have been, you can never stop learning. You know, that's just like doctors and lawyers. They're never done. You know, it's a journey till the end. Yes, you get better and better and better at it every single day. You know, yes, I could pull up any chart and spot a pattern and say, yeah, I'm going to get in here. No, I'm not going to get in here. You know, and you just get comfortable. You get relaxed. You know, it takes the guesswork out of pretty much everything that you do. You know, here's another perfect example of a cup and not a handle, right? You can't get fooled for this, which is why we wait for the handle to break that point, right? 1, 2, 3, handle. This is a fake out. So it's important to, you know, to look for these patterns, to recognize these patterns, and to adjust your trading strategy accordingly. All right, so now let's look for head and shoulders. You know, y'all might be familiar with that, but, you know, it's a very powerful pattern. All right? You know what? This kind of looks like a Head and Shoulders right here. But then it kind of broke out again. So let me look for one that's clear, a little bit clearer. If we could find one, you know, this is kind of looking like it too. But we need one that is one and that works for me to show you. So let's see if we can spot one, either to the upside or the downside. So let me just dig in here. Some of these time frames. You know, could this be a Head and Shoulders? Yeah. I don't know. But a Head and Shoulders is you're looking for a pattern like this. You got your head and your shoulders. But in a true Head and Shoulders, you want the price to be like this because you want your break, if you're going to go short, to be right here. Again, your measured move would be here. And the same thing to the downside. You know, if you have... Let's just see if we can find one. This could be. Alright, you got your shoulder, your head, and then your other shoulder. But also, what do we have? The right side of the roof. Alright, so you got your head and your shoulders, and then you're going to buy that breakout. Alright, so there's a little nice example of a Head and Shoulders on the 5-minute time frame. But notice how that Head and Shoulders looks. Alright, notice that pattern. Alright, because your line is going to go like this, just like your other Head and Shoulders to the downside would look something like this, and your line, your trend line, would be here, and you'd be buying short there. Alright, guys, I'm kind of tired. I don't know how long I've been doing this video, but let me look at this 15-minute chart right here, because it looks like a Head and Shoulders forming right there. It's a weak one. Yeah, it is what it is. So, anyway, guys, at the end of the day, I hope this helps you guys a little bit better. Again, you know, cup and handles are powerful patterns. You know, your ascending wedges, descending wedges, triangles. What else did we talk about today? Head and Shoulders, to the upside, to the downside. You know, this will give you a base, a platform. You know, watch a video over and over if you want. You can go in and on YouTube or Google or whatever, and, you know, identify, you know, just type in the patterns that I mentioned. All right. You got a double top reversal pattern. You got a double top. You got a double bottom, a triple bottom. You got Head and Shoulders. What else do we talk about? An ascending wedge, a descending wedge, a falling wedge, a triangle. You got diamond tops, diamond bottoms. I covered the most basic ones here today. You know, a diamond pattern. Well, that's gone now. I don't remember. I think we're on Neuro. But a diamond pattern will form at the top or the bottom. And this is pretty much what you call a diamond pattern. Alright, your measured move is here to here, but you're looking for the downside. Why? Because we're in an uptrend. And then the same thing would be true for a downtrend. So, you know, spend some time. There's not many, you know, there's 1,000 different strategies, or what are we even calling this? I don't even remember what I said. Patterns. Top 10 patterns. All right. The ones that I mentioned today are the ones that you are going to see day in and day out. They're going to happen time and time again. All right. So I hope this video helps, guys. I'm like tired. I woke up early this morning. I think I was up at like 3 o'clock. So I'm going to jump off now. If you haven't joined us on Discord, join us. The link's in the description. I appreciate each and every one of you guys. I want you all to succeed. So have a blessed day, guys, and I'll talk with you again soon.